Let's talk about the so-called sell U.S. trade. Maybe you say it's getting louder in certain areas. Just as a reminder, as I mentioned going to break, last year the outside the U.S. trade trounced the inside the U.S. trade by the widest margin in a long period of time. Give you an idea. The Israel ETF, up 43%. S&P was up 16.5%. Brazil, 41%. Emerging markets, 31%. Japan, 26%. And the FTSE in London, up 21%. So that gives you at least an idea. Then we heard a week ago or so that BlackRock's Rick Rieder was dumping U.S. credit in favor of emerging markets. Now we learn from the Financial Times that PIMCO is pivoting away from U.S. assets as well, according to the firm's CIO, which told the FT that because of the president's quote-unquote unpredictable policies, it was leading to a multi-year diversification away from U.S. assets. Just last week, Amundi, which is Europe's largest asset manager, said it would cut U.S. dollar assets over the coming year and expects the dollar to weaken further. Earlier this week, you might remember that headline for the Wall Street Journal. Wall Street's hunt for cheaper stocks goes global. Last spring, it was sell America. Now it's just buy everywhere else. Not saying that America's done, not sell America, buy everything else. Buy America, but buy everywhere else, too. What do you think of this?
I think it's real. I think it has legs. Don't think it's a one-hit wonder, as some emerging market and international stock rallies have been over the last 15 years. We build portfolios. We build them with international stocks as a permanent part of the mix. In many years, that means you have to say you're sorry. In some years, that means not having to say you're sorry. But it's an important thing to do because the U.S. equity market has been so strong that the rest of the world has looked at it and said, what are we doing wrong? And they are fixing not all of their problems, but many. Larry Fink's letter to BlackRock shareholders last year was about why did the U.S. recover from the pandemic so much better than everyone else? The depth and breadth and sophistication of our capital markets. Sure. The stock market and the bond market led the economic recovery. The other countries didn't just read that and say, oh, well. Look at what Japan did, the Nikkei. They forced the companies that are listed on that exchange to come up with a plan in writing how they're going to make their shareholders money. We're going to buy back stock. We're going to get this stock above its book value. When you look around the world, all of these different markets working, all of them have put through market reforms to build their capital market strength. And the result of that is people are interested in owning those equities, not just U.S. investors going overseas with a Vanguard ETF, local, in-country, institutional investors, instead of sending 80% of their money to the S&P, are now holding some back and investing in their own companies.
Also, we know that Kevin Warsh and Donald Trump have talked about this multiple times. One expects there to be several interest rate cuts in the U.S. That's not necessarily true overseas, so that's one reason. And on Rick Rieder, and maybe he wasn't happy that he didn't get the job, so he dumped a lot.
No, this was before. This was way before that.
The U.S. dollar is down 9%.
Seriously, this is way before that.
Which is a very big factor here too.
I have an idea for you because we're on this international trade very heavily within my firm. The IDV, the iShares International Select Dividend Fund, is that old economy you guys were talking about. It's energy, it's materials, it's utilities, and that is what's growing internationally right now as everyone else tries to build the infrastructure to support the AI trade. So worth giving it a look.
All right.